What is going on, y'all? This is Pay Me in Dividends, and today is June 13th, 2025. Welcome back to the channel. If you're new here, welcome to the channel. I talk about dividends, dividend ETFs, higher yield investments because my personal objective is to create a steady form of cash flow or passive income so that eventually I do not have to rely on my employer and I can actually have the ability to do what it is that I want to do by way of dividends from the stock market. So today I want to talk about QQQI from Neos. All right. So as you can see that, they're an award-winning ETF. And this has become the anchor to my portfolio. And I want to show you a few reasons why they're the anchor to my portfolio and also how they're able to generate a 15% yield while simultaneously keeping up with the overall market. All right. So just a quick rundown. As you can see here, they pay a 15% dividend yield, and that is paid on a monthly basis. And this fund has been out since January of 2024. So it's been out over a year now. You can see here they have over $2 billion in assets under management. And that is important to note because assets under management is basically proof that people trust this ETF. There's a lot of retail investors who have bought into this ETF. They also have another fund, which is SPY based off of the S&P 500. But today we're going to go over QQQI, which is based off the NASDAQ. And basically what this fund does is they seek to distribute high monthly income, generating in the NASDAQ, investing in the NASDAQ 100 index, and then writing covered calls on the underlying assets. All right. So if we go down here, we can see their distributions. Now, this is one of the things I love about this fund is look how consistent these payouts are. All right. I know some people who watch my channel own MISTY or MSTY or some other yield max funds or round hill funds. Some of these, hyper yield ETFs, and the distributions tend to fluctuate a lot. I do have some MISTY MSTY from YieldMax, and it is awesome. I really, really like it. It's done very well for me. But the income fluctuates based off of the implied volatility that month, meaning that they're able to generate option premium, premium from options, which is how they're paying us our dividend. But QQQI tends to be a bit more stable. Enough volatility to extract premium from the option market, but still, the payments aren't going to fluctuate. All right. So if we pull up the 2024 chart, again, we can see how consistent they've been. It looks like the lowest payment in 2024 was 59 cents per share or 58 cents per share. And the highest was about 64 cents per share. So you see there's only about a 5-cent variation in distributions all of 2024. So that is one of my favorite things about this ETF is how predictable the income is, especially if you, assuming that you plan on living off of these type of investments at some point. I think it makes it a lot easier to create a budget and stick to it, knowing exactly how much you're going to receive every month based off of the amount of shares that you hold. All right. So now if we go down here and look at the holdings, again, this is the NASDAQ 100. So you have big name companies that we're all familiar with. We have Microsoft, we have Nvidia, Apple, Amazon, so on and so forth. These are, the NASDAQ is heavily tech weighted. And so you're going to get these big name companies. All right. So if we go over here, another thing I want to show you guys is this actually appreciates in value. All right. Now, share price wise, it's not going to go up in share price the same way the NASDAQ is, right? QQQ is up 11% over the past year. QQQI is actually down 1% over the past year, but it's still held up pretty well. And since inception, it's up 2.5%. Now, you have to look at total return, all right? So you got to account for the 15% yield that they're paying you out on a monthly basis. And a great website to get a visual on this is dividendchannel.com. And you can compare two different stocks or ETFs on the market. So we're going to pull up a chart of QQQI versus QQQ to show you how close these are in performance in total return. All right. So this is assuming you invested $10,000 in both of these, but really this number can be any number, whatever amount you invest. This is just giving you a visualization of what it'll look like over the long term, right? So we can see that QQQI is the black line and QQQ is the blue line. And you can see that they are very, very close, extremely close. QQQ obviously has outperformed about 2% in total return since January of 2024, but still very, very close, all right? So I think this is very good for income investors. And another chart I want to show you guys is I want to pull up SPY, which is another NEOS dividend ETF that is actually a bit older than QQQI. And look how farther apart this chart is, all right? So SPY has outperformed SPY in total return by 20%. And this is accounting for dividends reinvested. If you look at without dividends reinvested, SPY has outperformed SPY by closer to 25%. All right, so this one has not held up as well. Now, SPY, I think, still is a great income fund, and you're definitely not going to lose money in it. I think you'll have a bit more stability, but QQQI tends to keep up with the underlying a lot better when you account for dividends. Now, another thing I want to show you is you can go to this website. It's called marketchameleon.com, and you can look at the implied volatility. But, you know, check this out, right? You don't have to be an expert at IV or implied volatility. But what you can do is you can compare these things against other things, right? So we have SPY and then we have QQQ, all right? And this is how companies basically gauge the implied volatility so that they have enough volatility to extract premium out of the option market. So you'll notice for QQQ, the IV currently is 18.2 and the IV for SPY is 14.4. All right, so again, SPY has a 14 IV currently and QQQ has an 18 IV. All right, and then if we look at the 52-week average, QQQ is above 20, around 20.5, and you know, SPY, the 52-week average is around 15.4. So just from this alone, you can see that QQQ has a bit more volatility, right? It's not as high as MicroStrategy. It's not as high as Palantir or NVIDIA, but it's just enough. I think you want to have at least a 20 on average, more or less, to be able to generate enough premium without eroding your principal, right? Because you don't want your investment, you don't want your principal to go down either. Ideally, you would either want it to remain stable or go up little by little over the long term while still providing that income. And I think QQQ is that perfect balance to give you some stable principal, maybe even some appreciation, while still kicking out that 15% yield that is paid on a monthly basis. So yeah, I just wanted to show you guys this ETF if you're not already familiar with it. Again, this is a main staple in my portfolio. I have QQQI, I have MSTY, I have a couple other on my watch list that I want to add. I've really consolidated my portfolio. I'll have to do a portfolio update soon here, but I've really consolidated, and I'm trying to focus on the winners and the ones that I really believe in long term. So QQQI is my main staple. It is the anchor to my portfolio for the foreseeable future. And you guys let me know in the comments, what do you think? What's your portfolio anchor? What is your go-to? What is your staple? What keeps your portfolio running smoothly? and to keep that longevity, right? So that eventually you can use this dividend income to pay bills and expenses and travel and do whatever it is that you want to do, right? So as always, I appreciate you guys stopping by the channel. Leave a comment down below. Let me know what you think, and I will check you guys out in the next video.